Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This Simply Stocks, and I'm live in another live session with you all, as promised around 10:30 a.m. And today I want to talk to you about a very interesting point, and this is about the meeting, or you could say the comments that the Fed chair have had uh, on the current inflationary pressure that the US is facing, and the fact that the interest rates may just continue to rise going forward. So we'll discuss about that, and we'll also discuss about the markets and what could be the market situation uh, going forward. Plus, I'll answer your queries as well. So let more people join in, as it's a Sunday morning. So hopefully more people will join in into this session. Namaste Vishal. I hope you're doing well, and I hope your investments are going well and not like me, who is down at the moment over the last 1 year. And then let me know if you are also down in terms of your uh, portfolio from October 2021. Since then, how much have you lost or have you gained over that period? Would love to read that as well. Uh, so we'll talk about that in a while. So okay, Vishal, you are also down. So I'm down at the moment, over 20% at the moment. Bhupender, good morning. I hope you are doing well as well. Uh, so typically, I think most of the investors, especially long-term investors, are down or stuck in some of the companies, whereas traders might have made some money and then ended up having some cash. So those who are intraday traders or short-term traders might have been making money as well. Uh, Sivaramakrishnan, greetings. A very good morning to you. Hope you are doing well. Which place in India you are from? Just let me know. The weather here is changing, so it's now moving towards that you can say autumn kind of a weather, and we could be heading towards winter or so by September. So not much time left. 2 3 weeks down the line, we could be moving towards the wintry sort of weather here in the north. So that's the thing. Ankit, thanks for your support, Ankit Gupta, and namaste to you. Hope you're doing well. Uh, and I hope your my voice is very clear to you all, and the picture as well. So that's the thing. So Vishal, you're down by this much, but in terms of percentage, how much you're down? That's what I wanted to know in terms of percentage terms. That would give me a good idea. Renu, a very good morning to you as well, Mr. Mandal. Have a nice day to you as well. So before I begin the session, in terms of understanding as to what repercussions that point of view of Mr. Powell would have, morning Dheeraj. Uh, I would like to just, on a lighter note, talk about sports a little bit to get things going and let more people join in the next 3 4 minutes, and uh, then we'll talk about this specific issue as to what Mr. Pal has said. So let's just begin the session with some sports talk. So the U.S. Open begins tomorrow. That's a big tennis event and the final Grand Slam of the year. But the biggest event of all for we Indians is the India-Pakistan clash that we have today in the Asia Cup. So India starts as favorites, in my opinion, with the kind of balance and the kind of team that they have. But when we begin in any India Pakistan clash, it's like 50-50. So it will be interesting to see how India would get through the top three of Pakistan batting lineup, and it would be interesting to see how the Indian batting match up, because they have adopted a very aggressive attitude towards the first 6 10 overs in a T20 internationals over the last you can say year or so, since the loss in the T20 World Cup that we faced and we could not make it to the semi-finals. Since then things have changed, and Rohit Sharma has changed things for the good and looks pretty good now. So I hope that aggressive attitude continues, even if we are three down by the end of the 10th over. We should continue with that. Giving away 3 wickets for say 80 85 runs, 90 runs is pretty fine 90 for 3 after 10 should give us the impetus to be plus 170, and that is at least what is required in my opinion against any batting lineup. So in that sense I believe that it will be interesting to see how things pan out. The match begins at 7:30 and it will be a very interesting tussle because Pakistan are no pushovers, and we have seen that. And over the last couple of years, they have done exceedingly well. But hopefully, India should win this one and should win against Hong Kong and get into the Super Fours pretty easily. That's my assessment. So let's see how things pan out on that front. In terms of football, we were banned by FIFA, but we are back in the mix because the ban has been lifted by FIFA, and we have a couple of internationals, friendly internationals coming up. Uh, Next month. And we have seen that how Manchester United has played magnificently against Liverpool to win that match. And it looks like my favorite team in the EPL, that's Manchester United, is back in the mix there in the EPL as well. So a lot of things going on, and that's where I'm keeping myself busy in terms of the sports activities that are happening, or sports events that are happening. And because whatever the market is doing at the moment, for someone like me who is invested fully into the market, it is hardly anything we can do. But just to have an understanding as to how things have panned out, so let's discuss as to what Mr. Pal has talked about, and what are the repercussions for the market. So what happened was, in that Jackson Hole meeting, is that uh, basically, in layman terms, I'm going to put it together and just let you know, is that the US Fed says that they don't care about the growth at the moment, at least for the next 6 months. That's what it seems like for the next 2 quarters. And they are looking to curb inflation as much as possible. In order to do that, there might be some pain in terms of growth aspect that is clearly mentioned by the Fed chair, and that will happen over the next 2 quarters. But the rates have to go up and the inflation has to be reined in. I think it is more now. It will be now what one needs to do is to analyze whether you're a long term investor or even a medium term investor or a very short term player for a month or 15 days or 20 days. Now I'll put perspective for both individuals. First of all, for short term, so once this point has come out, and if you are trading for 1 to 2 months perspective, then it all your trades are now over, in my opinion. So all your long-term trades, longs, etc., you have to close tomorrow. Uh, yeah, there could be a bounce. So what happens is every time a market sells off at the beginning, say the market closed at 17,550, if it opens around 17,300, 350, round about that, it goes there. There'll be a bounce, a 100-point bounce, a 50, 70-point bounce. That's where you have to exit your long positions and stay in cash. For those who are slightly long term, even 6 months perspective, I think there is no need to fear. The market will price this in over the next 1 to 2 weeks across the globe. There will be selling, but in marquee stocks, if you have bought from a 1 to 2 or 3 year perspective, you have to stick at it, and that is what exactly I am doing. The kind of portfolio I have made, 1 or 2 stocks is for the next 4 or 5 months. The others are basically for 1.5 2 years. So I'll be sticking it out in this period. So anybody who has a time frame for more than 6 months need to just take this out, because if they have good quality Indian centric stock, and that is the second point I'll come to, but if they have good quality domestic centric stock, there's no need to worry. There will be a sell off and then there will be a lot of buying there. Now why I'm positive about this is that the FIIs are back, and the FIIs have been buying regularly, and whenever the selling is happening in the market is not on the back of FII selling 2,000, 3,000 crores. Now what could happen tomorrow, in my opinion, is that the market may open lower at 17,400 or so, go even lower to 17,300, 17,250, and there could be decent buying because FIIs would come in probably at those levels to buy into. Now, why I am saying that 17,200, 250, there could be buying. If you look at the EPS for the market that I have talked about all the time, 800 rupees has been the EPS this year. I think 900 rupees is expected for FY 23 with the kind of earnings that are coming through. At around 900 rupees, I think we are sitting at under 20 times, and at around 17,000, we are sitting at very interesting levels at 19 times. So it will be very difficult to see a market go down below 17,000. Yes, my stance has changed since last month. It is all because of the kind of FI inflow that has come in. Now, one thing that can change all this stance is the fact that FII may sell big time tomorrow. If that happens, if a foreign institutions sell 5,000, 6,000 crore, then we could be in trouble. Then we could see even 6,000, 16,000 over the next 1 or 2 weeks, and so on and so forth, which I don't think will happen because they have come back after 15 months of relentless selling of over 2 lakh crore. I think nearly 3 lakh crore or something. And for them to just go away with this notion that okay, Fed will not reduce rate early and will continue to hike rates till maybe mid of next year or by March of next year, I don't think that will suffice, because in my opinion, this was expected. Uh, it was the market that had run up a lot, and I was surprised to see how Dow Jones had run up earlier. So Dow will come down. Dow may come down to even 31,000, 30,500 levels. Indian markets will come down, but some of the companies which are Indian centric, I'm reiterating this point, will continue to perform because they are undervalued based on their FY24 earnings, not 23 but FY24 earnings, because things are coming back to normalization here in India. You look at the auto space is doing well, and this is something. Uh, this is something that one cannot ignore, that we are a manufacturing hub, we are becoming a manufacturing hub, and now things on the manufacturing front are coming back with the semiconductor issue getting to a relative, you can say, safety. And with the oil prices at these levels, with commodity prices now cooled down, and the fact that RBI is also raising rates, so commodity prices will remain in check. So I believe companies who are making products will gain, and we are seeing that happenings with white goods stocks performing. We are seeing how Whirlpool, Blue Star, etc. have come down, come up from the lows. So if you are an Indian centric stocks companies, then there is hardly anything to worry about. Yes, you could see 3, 4, 5% retracement, but then there will be heavy buying there. The problem will occur if you are into export oriented stocks. And so companies in the IT space which have been bruised and battered up till now may continue to feel the heat. Even some of the pharma stocks will feel the heat, chemical stocks will feel the heat, and anything related to export will have an issue, especially exports to Europe and US will have an issue. I think things could get worse on that part. Going forward in the next 2 to 3 weeks. And yes, things will get better there as well after 6 to 8 months. So if you are into IT, pharma, chemicals, and other companies which are export oriented primarily, say they're more than 50% of their business is from export to Europe or US, then you have to be careful. You have to see the ticker of that particular stock very carefully, keep your stop losses in place and exit, because there could be more pain ahead for the next 1 or 2 quarters. Whereas in Indian centric companies, say festive stocks, you look at which work between October to March, you look at white goods company, you look at manufacturing companies which are India based, they will continue to perform. So there will be a across the board sell off for sure for the next 1 week or so. But then Indian centric companies should bounce back pretty quickly. So that's my point. Even in IT, I believe that the valuations are such. I will not be surprised if some of the IT stocks will make their bottom over the next 2 3 weeks. With the fact that okay, what worse can happen? They can increase the rate by 75 basis point twice, and then the speed will reduce because the inflation will come under control. So coming to the fact, so this is for short term players. You have to be very careful if you have export oriented portfolio, or if you are very short term, say 2 weeks, 1 month player, then you have to be in cash and don't take long positions. For long term players, the benefit here is that if inflation comes under control, we could be in a much better space in companies which have pricing power. So companies like Asian Paints, Pidilite, Titan, etc., or many other companies which are larger mid caps, DMart, for example, and all, they will not say pass on. They will pass on the price hike to some extent, but when they'll have reduced or inflation gets reduced, you don't see their prices come down, and that's where they make a lot of money. So over the next 2 years, I see these companies making a lot of money. So if somebody is invested from a 1 to 2 year perspective, even things should be pretty good for you also. So that is my point of view. In my opinion, there will be a very short term effect of it. 17,000, I don't see 17,000 gets broken. I think 17,200, 300 would be the level where buying should come in. There could be 2 3 days of extreme volatility. The wallet India VIX could go to 22, 23, even 25, and that will be even better, because we had gone from 24, 25 to 17, 16 levels. That had to spike up once and then has to reduce. So in all fairness, whatever is happening is quite evidently understood, and I have been talking about it, albeit this has happened a little late. I've been talking about it about say 2 weeks back or so, and the correction did not come in. Now the correction is coming in. It is just a correction. I feel new highs should be achieved either by this year end, or next year, early next year, and we should march forward, because what will happen is that the market will start to price in FY24 earnings. I think from October, November, that will happen. The market will not look at say a December or March earning only. They will look at what FY24 holds for most of the companies, and again Indian centric companies will end up doing very well in FY24. There will be a lot of uncertainty with respect to export oriented sectors. So that's my call on the market. Long term players should uh, just see what is happening, and if you have export oriented portfolio, then you have to be a little bit careful. All right, so I'm ready to answer your queries. Kindly use the super chat and super sticker feature. That will help me grow the channel. That will help you also ask me questions and eke out answers in greater detail. So be kind. I think KPIT is one that I can answer. Bajaj Finance you hold. KPIT is a hold. It's a disclaimer. I have the stock in my portfolio. I think it could go to 520, 530 at worst. But I think with the kind of business that it is into auto ancillaries and into that EV space, I think they have a lot of business here in India. They have a lot of business in Latin America and other parts as well. I don't think there'll be a massive effect on the stock, but there will be somewhat a little bit of effect on KPIT as well. Okay. So data pattern as a company is pretty good, but it's not a short-term play that you probably buy and sell over the next 6 to 8 months. It's a good 3 to 5 year bet. If you can probably spread your buying, I think then it will be fine rather than buying immediately. So Dilip, Dixon Tech, I won't say long term, but what you can do here is that around 3700, 3600, if you get it, 37, 3800, you buy that. And I would say over the next 6 months, you can make 20%, 15 to 20% on Dixon Technology. So that's the call. I will not be comfortable holding a stock at 100, 120 multiple from a long term point of view. Uh, Moltech packaging, yes, you can, but again, packaging costs have increased a lot since oil had gone to $120 per barrel. Now it has come down. Probably wait for the September numbers and then take a call on Moltech. Ravi, hi, good morning to you. Okay. Fairchem is a decent company, but I would prefer something like Vinity Organics. As if you probably ask me in the chemical space, or I would prefer any other space and not chemical at all to buy into it. a company like that. So Polycab looks good if you get a chance to buy it around 2300. That's pretty good levels, 2280, 2300 to buy into. If you have bought earlier and you you want a call on that, probably hold on to the stock. I don't see massive downside on Polycab. So LTTS around 3000. I think you have bought around 3000. I would say hold on to the stock. But if it is possible, shift to consumer centric stocks or that kind of portfolio. If you have only one stock which is into IT and others are consumer centric or Indian centric, then don't need to worry. Hold on to the stock. Okay. Okay, so Easy Trip, I think Easy Trip is again, these kind of stocks are pretty good to buy in February, March, and probably exit in August, September. I won't say that you buy long term, probably trade short term, and if you get a chance, exit around September, October on a rally, and then probably buy again in Feb or so. So Tata Coffee complete avoid. I have looked at these companies, see coffee or tea companies, etc. You don't go ahead and buy immediately or buy long term. Probably you can trade in them looking at price levels, but do not go ahead and buy long term in them. Or if it's See, always Stovecraft is good, but again, you're taking a risk buying into a 3,000, 4,000 crore market cap company. Probably you can put 5% of your total investment into something like a Stovecraft. Oracle, I think you're asking about Oracle financials, if I'm not wrong. It's an avoid completely. I've talked about IT. Even if you want to buy into IT, buy into a TCS uh, or say a Tata Elxsi if it comes to around 8800, very good levels to buy 87, 8800. So Cabra Extrusions, I'm not following the stock that much. I won't be able to comment on it. So that's the thing. So Sigma new is a new IPO that you're talking about. Be kind. It's a decent stock, but again the valuations are stretched. If you get any 10-15% decline from current levels, it's a buy, and probably in the next week or so it could cool down, and that is where on consolidation you can buy. Don't buy after such a run post listing, etc. Okay. So Nahar Industries again a stock that I don't track, so I won't be able to comment on it at all. What else? So I don't know when you paid. It's not reflecting here as well. Be kind. So IGL, with the kind of things that they are talking about with respect to price hikes, etc., looks a good stock, but something that has disappointed over the last few months. So be careful in that. But over long term, should end up performing. So that's the call. So Tanla platform, I believe the kind of numbers it has produced, not impressed at all. So wait for one more quarter and then take a call on it. Don't go ahead and buy into it. If you have the stock on any rallies, exit. That's the call on Tanla at the moment. Okay. So Zwari Agro is also good, but there are other companies like Coromandel International, UPL, which looks better on declines that one can look at. In fact, UPL around 750 if you get a chance. Definitely, it's a buy around 745, 750. I won't be able to comment on Radhiko Khaitan, so that's the point there, Ganesh. Okay, happiest minds or persistent system for 10. I think happiest minds. I would say happiest minds if you really want to buy 10 to 15 years, the kind of management backing and the business that it does. You can buy that if you have a 10 to 15-year point of view. But I would suggest that you uh, buy into even better companies which have a huge pricing power, larger companies into consumer domain if you have such time frame in mind. So Venky's is a buy. Venky's is a hold, I would say, not a buy but a hold. Do not buy a fresh. A Mastech, I think, is an exit. Again, a disclaimer: I had the stock, I have exited. So, can you take that on note? But Mastech, in my opinion, with the kind of price pattern that it is showing, and with so much exposure in UK, which is going through the turmoil, uh, it could go down even further as well from here. Alright, guys, thank you. Thanks a lot for being online. Please like and subscribe my channel and hit the bell icon so you get my videos straight away when I post it. And kindly support me on Patreon. Thank you.